Hello everyone, hope you're doing well. Welcome to another episode of Altcoin Thursdays, the show that seems to come out to every single Pico top. As soon as I started covering altcoins, I knew the market was fucked, and as is tradition, every Thursday or towards this time of the week, we've just had big red candles. So my apologies for that. Clearly some causation rather than correlation going on, but nonetheless, I'm grateful for your positive response on this video series. We'll keep it going, and if you want to see it continue, leave a like on the video, and we're almost at 50k subs. Getting there would be cool. It would be utterly meaningless to us, given the monetization on this channel is turned off, but it's a nice number, and we like round number confluence around these parts. So first things first, as far as context goes, I always kind of give this exasperated sigh when I have to do Altcoin Thursdays in the past couple of weeks, and that's not because of the sad state of my personal life that I'm used to, but for this, it's because the past few episodes have all been taking place at Bitcoin resistance, right? So whether it's the weekly range high, which we know is also confluent with the monthly range high, it's essentially talking about altcoins at Bitcoin resistance, which is really tricky. Hence why I've been very kind of cautious and conservative, because if this even pulls back moderately, a bunch of these will be wiped out and all the levels will be irrelevant and it will look like shit. So in the absence of signals of high time frame continuation, or once the deeper pullback is here, the sort of setup that makes the least sense is piling into altcoins at BTC resistance. And the reason I say that is, you know, if the market breaks out, then we can make an argument for momentum continuation across the board, including altcoins. That's fine. If the market really pulls back towards this kind of 20k level, midpoint, all that type of stuff, and we're fishing for a higher low, then you can make an argument that part of that dip buying portfolio should be some of the stronger altcoins. Both of those are clear. The breakout, momentum continuation setup, or the visible pullback high-low setup. I'm fine with both of those. I'm far less fine with just BTC grinding for like this week at resistance, and then choosing that to be the kind of set of conditions under which to punt altcoins. Out of the three I mentioned, breakout, pullback, or just resistance grind, we have resistance grind right now, and it's the worst out of all of them. So take that with a big pinch of salt. The same applies to ETH. It's at this monthly range high we've spoken about for ages at 1680, and we've also spoken about the attempted breakout at that same level. It's like a multi-time frame range high, and it's at best unclear. You know, like breakouts, as we discussed on Monday markets and elsewhere, on Tuesday's newsletter especially, we like them when they're fast, aggressive, don't spend much time faffing about and retesting, and they just go. And as soon as that's not the case, at best you have prolonged chop, at worst you have a failed breakout, which usually leads to downside price action. And so for ETH at the moment, you know, BTC grinding at resistance. ETH also tried to break out and has just been making lower low closes for the time being. That doesn't mean it can't ultimately consolidate and then break up, but it just means it's not the clear setup of, okay, dip into support, or okay, the breakout's stuck, and then we can see what other altcoins are going to move alongside the rest of the market. It's chop at best, which is fine for short-term altcoin trading. But if we're talking about these higher time frame levels and rotations on a weekly show, as we are here, we still need to be cognizant of the majors at resistance, especially when resistance is proving to be a bit of a challenge, which it is at the moment. Nonetheless, with all the usual caveats out of the way, let's talk about the 5 altcoins I've got on my watch list as far as being at relevant and important inflection points. The first is AVAX. And there's specifically a daily level that I think is particularly good on this thing. And if memory serves correctly, which it rarely does nowadays, it comes out around this 2130 level. Now, this is as kind of textbook as it gets as far as support, resistance, pivot type of things. You had support back here, resistance, support, resistance. Like, it's a very, very clear inflection point for the market. And especially recently, which is what we like to look at with price action, it's recency. We're not trading yesterday's market. We're not trading last week's market. We're trading today's market. This same level has been very well respected, price sensitive, whatever you want to call it. And so all the daily closes, no fake out, no nonsense, have been closing below resistance. So I think that's a kind of inflection point to watch. If the market will turn around or you want to see strength for AVAX, I think a daily close through here would be the first good signal, at least the one that would present you with a clear invalidation. And I also think in terms of kind of targets or space to maneuver between this future resistance break and the next resistance, there's a fair bit of room, to be honest. Like, this is a very big level, so I'd expect a fairly sizable move from it. And then the next trouble area, if we're being even somewhat conservative, probably be towards this former range high, range low thing. We can extend the level and see that we've got a bit of a pivot at $27. And, between 21 and 27, again, it won't be perfect, but if there's close to 30% between the high time frame pivot and the next trouble area, that's definitely worth paying attention to. So 21.30 for AVAX, or $21, 22, whatever you want to call it, I think it's a very good daily level to have on your charts. It's also been very good for short-term trading recently. As far as pullback levels go, honestly, I just have this one marked on my chart because I'm not a huge fan of any of the pullback levels. I don't like diagonal, inefficient-ish compression, grindy price action as support. You know that for me, I like my support built horizontally with clear ranges, delta clusters, whatever you want to call them, as opposed to a more inefficient compression, diagonal type of structure. And if we look at kind of how AVAX behaved on the run up to this level, this type of price action, the diagonal grindy stuff, doesn't make for great levels in general, and it's really not my favorite. So at the very least, if the market starts to puke lower, I would have to look beyond that consolidation and maybe consider this kind of former range high and the bottom of the range at $15, which sounds drastic, but again, if we get high time frame pullbacks across the board, a lot of these levels come into play. So AVAX is on the watch list because there's just a very good technical daily level for bias. If it closes above that and the rest of the market doesn't look like a total scam, I think there's a decent continuation trade. Otherwise, I'm less comfortable with the inefficient kind of cluster under 20. And for me, the larger pullback target is closer to 15. Another one, as far as recent relative strength and helpful weekly structure goes, is GRT, the graph. So this kind of looks a bit like Phantom in terms of its weekly range, where we had this little cluster consolidation thing at 14 to 15 cents on the weekly. Resistance, really ugly candle, but interestingly enough and importantly, didn't lead to a nuke. And since then, we've had daily sort of weekly closes and a retest of that support level for the time being. This is one that structurally looks fine. Again, it's at the whim of the rest of the market, which is at resistance and is all kind of tricky and difficult, but purely in terms of shorter term trading levels and clear weekly structure, 14 to 15 cents for this thing is a very self-evident range high, and if the market continues to be risk on or doesn't puke or breaks out or does whatever, this is one of those similar to AVAX where the next high time frame trouble area is quite some way away, in this case being closer to 30 cents. So if broader market conditions allow for it and there's a basically retest that holds, and barring a deviation, kind of a classic breakout and retest, there's quite a lot of space, 80% fairly conservatively on the weekly time frame before the next trouble area. I'm sure if we go down onto the daily, we can find something sort of as an intermediate target, such as this mini cluster at 24 cents as the first trouble area, but you can see it all, either way, there's a fair bit of room between the retest level and the next trouble area as far as resistance goes. In terms of structure, this is a very interesting one. A lot of the things I say as far as levels go, given they are these important inflection points, if you have a bearish view on the market, I still think you can use these levels, obviously just in the opposite direction. So for example, if everything pukes and you get a failure to turn this broken resistance into support, then this becomes the deviation, market's back within the range, and then at that point you're looking for the range midpoint-ish or the next level closer to 10 cents, and then depending on other stuff, maybe lower. But as an inflection point, as a weekly range, the support below this level is quite far away. The resistance below this level is quite far away. So it's a good one to trade, regardless of your directional bias and how the next week or so unfolds. Lido is a clear one, both narratively and technically, that we've spoken about. It looks a bit worse for wear on the daily time frame than it does on the weekly, but the weekly range, mercifully, is very straightforward. Specifically, this range boundary that we're dealing with at $2.60, $2.70, spike, no closes above until last week, and last week was the close above. This week we had a retest, so that's good. Structurally, that looks fine. Same consideration as the graph, essentially, where you've got a clear retest level, but if that fails, the whole thing kind of starts to look like garbage. In Lido's case, I'd say the weekly range low is closer to $1.60. So, if the market allows for it, this support should really hold, certainly on a closing basis, but it's already kind of doing its job fairly well. And then you're just expecting the highs and the sort of, I'm sure there are charts with more price history than this, but in general, this is across all charts a very good level. I could quickly take a peek to see a chart with more price stuff. Maybe OKEX has it. Hold on. Nope, of course it doesn't. Is Binance really the one with the most price history? This is the cutting edge research that I do in preparation for all of these streams. Maybe Bybit. No, it's all more or less the same stuff. So let's stick with Binance for now. If you have knowledge of a pair which has more price history, let me know. Polo? Whatever. Let's stick with this for now. But anyway, on a purely technical basis, weekly range breakout and retest, fine. If the rest of the market pukes from Bitcoin ETH resistance, maybe if the market is super strong, just get a dip deeper into T260 and that's it. If you see sustained weakness, like daily and weekly acceptance below the range low, well then we have to treat it as, oh god, we're all going to get fucked type of setup, which is a very technical term, where this ends up being the failed break. Your target is the cluster at the range midpoint and potentially the range low. So at face value, breakout and retest, fine. Keep an eye on the majors in case we get rugged. If it's a soft rug, then sort of the first level that you'd expect at the very least a retest of is the former range high at 260 or thereabouts. If it's a hard rug, back inside the range midpoint cluster, closer to $2, that's a lot of twos, and then 160 for the range low. But again, more or less just doing Altcoin Thursdays to share charts with you that I think have very clear inflection points and pivots, and then based on our other content, Monday Markets and Casual Friday and the newsletter, etc., you can kind of see how the majors develop to build a coherent picture for your directional bias throughout the week. And also, again, there's a side use case. You can always just short-term trade these levels without the larger directional bias. They tend to be quite good for the most part. Optimism continues to be volatile within the cluster we discussed on the daily time frame between basically $2 and $2.30. I argued last week that I didn't really want it to retrace back to this structure, but if it did, it would have to be a very kind of short-lived and snappy response. This is kind of exactly what that looks like, and there's also been some news today that's catalyzed the second leg, so to speak. Generally speaking, still, it's the way I approach clusters is to use them as ranges. So, this is the top of the range, this is the bottom of the range, then you've got the range midpoint. And so if we look at how prices developed since then, it found support at the range midpoint, bounced, retested the range high, bounced, so the levels are clearly working, for lack of a better term. Up here, it's a bit less clear. You could make a reasonable argument that it's retesting the top of the range that it made on the breakout. So contextually, not the most attractive spot to do business. I think if the rest of the market nukes and you get a chance to trade it at the range low, that would be quite attractive. I'm not sure what that would look like for the market as a whole, but as a fresh, untested level, that's nice. And also, again, the market has spent time at the range midpoint, it's spent time at the range high, but no time at the range low. So I definitely have my eyes peeled for that. I also think in the coming day or so, it'll be quite telling to see how the market responds to the whole Coinbase layer 2 news event. If it's risk offish, then you'd basically expect this to be a sell the news event and a lot of selling to follow through as a result of the news being baked in, the whole buy the rumor, sell the news thing. So you can kind of infer probabilistically what risk appetite is like among altcoins by seeing how these strong performers react to news in the coming days and into the weekend. But I still think overall this kind of pre-breakout range on the daily, on the intraday is very clear for optimism. Up here, it's slightly less clear. Maybe if we spend more time, we can carve out a range so we have two to work with. One is going to be the pre-breakout range, and then we'll have another one sort of post-breakout range. That'll be something worth revisiting over the next week or so. But for the time being, I think the levels that we do have are reasonably self-evident. Even with this clumsily drawn consolidation I've offered, you could do something just, as you can see on the chart, where you've got the range high at the recent highs, and it makes sense as the range high to the left, the range low at $2.30 as that range low, and you can splice that up and get a bit of a midpoint turning point at $2.70, and then do your intraday business in this consolidation. With the usual rules applying. I think that's also very viable, especially for those of you who prefer your short-term trading on altcoins. Dot is the final one I want to talk about. I'm not as strong as the others, but at least in terms of weekly structure, again, trying to point out very self-evident turning points, inflection points, what have you. There's been a very decent weekly close on this thing, based on this previous range at $6.80, $7, where you had support for a while, clean flip to resistance, and then last week was a pretty bullish close back through it, specifically a weekly engulfing candle, which spiked previous week's low and closed above previous week's high. So that's nice. And so as far as retest levels go, any weekly that doesn't close below 680 is technically a bullish retest candle within this context. And then the other side of the range, if this is a reclaim range low type of setup, your range high is closer to $9. So there could be something there. And you can always look on the daily time frame as well to see if there's any alignment. And we see this is the weekly range high. And if we're talking about weekly wicks, it could reasonably dip as low as sort of 630-ish, this pre-breakout candle, as long as the weekly doesn't end up closing below 680. So that's kind of what makes sense to me, and something on my watch list purely because of weekly structure. That's kind of all I've got. I hope it was helpful. Again, it's quite awkward making these videos when Bitcoin is just straight up grinding at resistance, so is ETH, and it's making everyone's lives difficult with the chop. I think if you want to avoid having a swing-oriented directional bias, that's fine. And there's still enough volatility in the absence of a swing directional bias to pump these things long, short term. And so if even that much is helpful, then I guess this video has done its job. Leave us a like if you enjoy Altcoin Thursdays. We should rename them to Pico Top Thursdays because they've been cursed ever since they've entered the channel. But, more opportunities to chat shit and share stuff which might be helpful to someone somewhere one day. Why not? I hope you all have an excellent day. See you for Casual Friday tomorrow, and thanks for sticking around the channel. Bye-bye.